Welcome back, everyone, to our next discussion on income. Let's get started.
This lesson is all about income. We're going to discuss the definition of income, the different types of income, and we'll review the tax documents that income is reported on. So I want to ask you a question. Which of these do you think is the IRS's definition of taxable income? Is it A, income is the consumption and savings opportunity gained by an entity within a specified time frame expressed in monetary terms? Is it B, whatever income the government feels like taxing? Or is it C, some complex formula? As you probably guessed, the answer is B. Taxable income is whatever the IRS and Congress say it is. What we generally tell people is that basically all income is taxable unless it isn't. So we're going to talk about some of those differences in the lesson today.
This is the intake sheet that every client must complete before seeing a volunteer tax preparer. On the intake form, you will find income listed on page 2, part 3. This is where clients can indicate to us which sources of income they had during the tax year. However, it is important that we ask clients additional questions to confirm that we are reporting all of their income on the tax return. Some clients may not understand what they are being asked by some of these questions. The income section of Form 1040 is used to report earned and unearned taxable income. Earned income is wages and self-employment income, while unearned income is from pensions or investments. The sum of all earned and unearned income is reported on Form 1040 as total income.
Non-taxable and exempt income. Non-taxable income is just that, income that is not subject to federal income taxes. States will typically start with whatever the federal income is and have their own additions and subtractions for certain items. You will learn about the particulars of the Maryland state tax return later on in training. Here is a list of most common non-taxable income sources we may see at our sites. Remember, these categories of income are excluded from the tax return completely. We do not need to take them into consideration when preparing the return, with one exception. Social Security can be non-taxable depending on the taxpayer's other sources of income. The Social Security benefits will appear on the return, even if none of it is taxable. When preparing a return for a client, always enter the Social Security benefits. In general, income that is exempt will still appear on the tax return. The income, or the portion that is exempt from taxation, will not be included in total income. Exempt income includes municipal bond income, portions of certain retirement benefits and distributions, and scholarships. You can find a list of more examples of taxable and non-taxable income in your 4012. If you have questions, ask your site manager or a more experienced volunteer for guidance.
Let's look at Form 1040 to see where and how different types of income will appear on the form. This is to help you understand what the completed form will look like. Income from W-2s is on the first line of the 1040. This is the most common form of income you will see. Notice these boxes to the left. This is where interest that is exempt from tax, dividends taxed as capital gains, or income that may be partially taxed will appear. The taxable portion is reported in the main column to the right. Capital loss or gains, like from the sale of stock, is figured on Schedule D and carried to line 7. Any taxable state refunds are carried to line 1 of Schedule 1. State tax refunds can be taxable if the taxpayer itemized deductions in the previous year. If a taxpayer receives alimony, it goes on line 2. Any business income or loss reported on a Schedule C is carried to line 3. Line 4 is for other types of gains and losses. Line 5 shows income from rental real estate and other income from Schedule E, and farm income or loss is on line 6. Both of these types of income are out of scope for our program. Unemployment income is reported on line 7. Other income on line 8 includes income from prizes and awards, gambling winnings, and jury duty. All the amounts on the right-hand column are then totaled. This is the total income. Now that you know about the types of income and how they can be reported on a 1040, let's look at the documents used to report this income. These are the documents that clients will bring in when they come to have their taxes prepared.
Most employers issue a standardized version of Form W-2, wage and tax statement. There are variations of this form, but they contain the same information. Just be sure to pay attention to the box numbers. Employers are required to make them available to employees by January 31st. Some employers may only make the W-2 available electronically, and we may assist clients in printing their W-2s if necessary. If a client hasn't received their W-2 by January 31st, they will need to contact their employer. Entries you will see on pretty much every W-2 that you will enter into the software include the employer identification number and address, the amount of wages and any federal tax withheld, Social Security wages and withholdings, Medicare wages and withholdings. Finally, state wages and withholdings are reported at the bottom. They will be entered into the software and used to prepare the state return. If your client has a job in which tips are normally received, like a waiter or waitress, be sure to ask about any tips they may have gotten. All tip income is taxable, whether or not it is reported to the employer or reported on the W-2. To report tip income not on the W-2, there are a few rules and forms involved. If you have a client with tip income, see your 4012 for more information and instructions on how to enter into TaxSlayer. Ask your site manager or another experienced preparer if you have questions. You'll find tips on the W-2 in boxes 7 and 8. We will look at more entries on the W-2 later.
Form 1099 MISC covers many sources of income. Most are out of scope for our sites. However, what we can handle is Box 3, which is for other income paid to you. This includes prizes and awards that are not for services performed. The value of merchandise won on a game show, for an example. Amounts in Box 3 can be reported directly on line 8Z of Schedule 1 with a description. These amounts are not subject to self-employment taxes and are treated like regular income. It is important to mention here that if the taxpayer receives income like this and does not receive a 1099 MISC from the payer, the taxpayer is still required to report the income. Now, if a client received a 1099 MISC with an entry in Box 6, they're either self-employed or an independent contractor. This income must be reported on Schedule C. Schedule C is used to deduct business expenses from gross business income and determine the amount of self-employment tax. Business returns are out of scope for basic certification. To learn how to prepare business returns, take the advanced course. Finally, it's rare to see non-employee compensation holdings on a 1099 MISC. This is normally reported on a 1099 NEC. If your client has a 1099 MISC with federal or state withholdings, please see your site manager or another experienced preparer for advice. If a taxpayer received a Form 1099 NEC With an entry in box 1, they are considered self-employed or they are an independent contractor. This income must be reported on Schedule C. The Schedule C is used to deduct business expenses from gross business income and determine the amount of self-employment tax. It is also rare to see federal income tax withholdings in box 4 on a 1099 NEC and or state tax withholdings in box 5. However, if the taxpayer has federal or state withholdings, please see your site manager or another experienced preparer for guidance. Business returns are out of scope for basic certification. To learn how to prepare business returns, you must take the advanced tax course.
Common sources of taxable interest income are checking and savings accounts, certificates of deposit, and savings bonds. Interest income is in box 1. If a taxpayer withdrew funds from a different interest account, like a CD, before maturity, they may have paid some penalties. This amount will be deducted from taxable income. If a client cashed in a savings bond, the interest will be reported in box 3. It's less common to see this, but if there was any tax withheld, it would be in box 4. And tax-exempt income is in box 8. Remember, it still needs to be reported on the return, even though it is exempt from federal tax. The corporate distributions that volunteer tax preparers may handle are ordinary dividends and qualified dividends, which are taxed at a lower rate. Capital gain distributions typically come from mutual funds and are also taxed at a lower rate. Form 1099-G is used to report a variety of government payments. Here is what we will typically see. This is a Form 1099-G used to report unemployment compensation. Be sure to check if there are any withholdings. This form is also used to report state refunds, which can be taxable for people who itemized deductions in the previous year. Form 1099-SSA is used to report Social Security benefits. In the software, you will enter the amount in box 5, which is net benefits received for the year, and box 6 if they had any federal withholdings. Form 1099-R is used to report distributions from a retirement account, including IRAs. If a client has a 1099-R, the first thing you want to check is box 2A. If box 2A is blank, you may also see taxable amount not determined selected in box 2B. If the taxable amount is not determined, you must have advanced certification to complete this return. So if the taxable amount is determined, you will enter the gross distribution and the taxable amount. These may be different if the taxpayer paid into this account with after-tax money, meaning money they had already paid taxes on. As always, check for federal withholdings. The distribution code is also entered. This code is important because it determines how the income is treated on the return. 7 is the code for regular retirement age distributions. These are taxed like ordinary income. If you see code 1 in that box, that is an early distribution. This means that the taxpayer took a distribution out of their retirement before they reached age 59 and a half, and there will be a penalty calculated on their return. There can be exceptions to this penalty in a few situations. This requires advanced certification to determine. Finally, this box will be checked if the income was distributed from an IRA or self-employed retirement account. If it is checked, indicate that in the software. Let's check in with Vanessa Franklin again. How much of Vanessa's income is taxable? She received a W-2 showing $31,500 in wages, a 1099-G for $800 of unemployment, and a 1099-INT showing $120 of interest. In addition, she received a $10,000 insurance payment for medical expenses due to a car accident. The insurance payment is non-taxable and will not appear on her return.
On her 1040, Her wages will go on line 1, her taxable interest on line 2B, and the unemployment received on line 7 of Schedule 1 gets reported on line 8 on the 1040. That brings Vanessa's total income to $32,420.
Scholarships and fellowships can be fully, partially, or non-taxable. A scholarship is tax-free if you are a candidate for a degree at an eligible educational institution and you use the scholarship to pay qualified education expenses. The taxpayer may have received a W-2 related to a scholarship or fellowship. Treat it as you would any W-2. Room and board are not qualified expenses, and scholarship funds used for this purpose will be considered taxable income.
To summarize, income that is not exempt or excluded is taxed. Only complete returns with income that you are certified to prepare, and make sure to always enter information from the tax forms into the software correctly.
We're all done here. Next up, we'll talk about adjustments, deductions, and tax.